Hello everyone, K Kim here from the Traders Club, tradersclub.com, and let's continue with our today's market commentary. Let's look at S&P 500 here. We're gonna work with the daily chart today. Today's market commentary, I think it was a Thursday I posted, and we looked at through this Fibonacci analysis here, some of the potential level of support. We looked at it here. As long as we stay above this level of Fibonacci retracement, we will consider this level or vicinity as intermediate term higher low. But we didn't know when I was doing analysis on Thursday, I did not know which level it's gonna bounce off of, right? This was a certain potential level. So first of all, this is an important level because obviously this is the first level of Fibonacci, which is a 38.2% retracement zone, right? From this decline here, from this top here, from this swing high. We declined 38.2%. Perfectly at that level, we saw buyers coming in. And what we have today is we have a bullish engulfing candle, right? That's a bullish engulfing candle. Basically what that is basically this candle completely engulfs previous day's candle here. Not only that, the good news about this, we also fill gap from the day before. You see that gap here? We had a slight gap right about here. That was completely filled with today's move. So next level of resistance, I think potentially will be about 207.70. This is a gap area here. You can see that that's a gap area. And sometimes, you know, when the buyers start to accumulate their positions and we start to see, you know, the public start to participate in that direction to the upside, they may just go straight through the gap. But sometimes what could happen is if we're not seeing enough buying activity here, what we could see is we may fill this gap next few days and then we may pull back. The question is, if we do pull back, are we gonna find bounce in this vicinity again and do a little double bottom action before continuing higher? Or are we gonna continue lower by creating lower low and lower highs, which is gonna be a minor term downtrend? But again, my philosophy is I'm not going to worry about the data that is not there yet. Okay, let's talk about the data that is there. That's definitely a data that we have. It's a tangible data. I call it a tangible data there. So obviously, currently in a minor term, we saw a lot of buyers coming in this vicinity. So I think next few more days, I want to see how it reacts in this gap area, about 207.93 or so. I want to see how it reacts to that level, and then I want to go from there. And from then, I can see, hey, are we going to pull back here, or are we gonna go straight back up, or are we gonna we're gonna thrust above this gap area? Because if we do thrust above that area, then this potentially be intermediate term higher low, and that's a good cultivation of an uptrend cultivation here that we're seeing since late September there. So S&P 500, definitely we're still in a minor term bearish sentiment because we're still below 10 EMA. You see that 10 EMA right here. So I think first things first, we need to kind of reclaim that 10 EMA back above 206.73, and after that we need to fill this gap. So if we can get above 208 or 208.50, 208.20ish, then I think we may continue higher and potentially get above this level, and thus making another higher high, right? This was high and we got the higher high. This was a low, higher low, higher low, and higher high, which that is constituting intermediate term uptrend there. So that's what you want to see as a buyer, and it looks like we may see something like that. But again, I need to see what's going to happen next few more days to confirm that. Quickly, let's look at Apple here. Apple, also this is a level that we talked about, right? We're looking at Fibonacci retracement, the exact same analysis we done on the S&P 500. This is a level that we talked about on my last video. I say, hey, this is a potential level of support. As long as we stay above in this Fibonacci retracement zone, that is still considered as an intermediate term higher low there. So what we saw today on Apple is that we gapped down and then we got back up to previous candle, above 50% of previous candle. What does that mean? It means we have a bullish piercing reversal candle. However, in any candlestick analysis, we need this candle to see a follow through, which means we need to see some supporters coming in and support this cause, right? By itself, it can still be like nothing. If we see something like this tomorrow, what that is, we're gonna see, what is that? What is that? It's like a bearish continuation candle or bearish continuation pattern. I think it's a separating lines. That's what they call it, separating lines. We got bearish candle, and they got bullish candle, and then we got another bearish candle. That's what they call it separating lines, and which means it will continue on to the lower, to the downside. So what we want to see, if you want to see this bullish piercing working out, we want to see at least closing above 115.97 next few days. If we see something like this, that's a great signal for the buyers. That's exactly what you want to see. And then you want to see 10 EMA getting reclaimed to the upside. 10 EMA currently residing at 116.59, right? So, but obviously we do have a pretty big gap up here, 120-ish to 116, 117 level right here. So that potentially be hectic for the buyers. Apple always act kind of, Apple always kind of react to it, peculiar way. Like every time when they're dealing with gap, it just freaks out. It's interesting. This was back in September 10th and 11th here. We had a gap right here. We came down. We started going back up, reclaimed that 10 EMA, and then we filled this gap. You see that? We filled this gap from September 2013, and we started like freaking out a little bit, and then we were able to gap back up. So what I mean when I say a little bit hectic, doesn't mean it's going to completely roll over. Things can get hectic. We might pull back a little bit. We might see some sideways movement. I'm not sure until we get there, but the bigger the gap is, the more freaky it's going to get. This was back in January 27, 2014 on Apple here. We had a huge earnings gap down there, and then we came down for about 4 days, and then it decided to gap back up. We feel the entire gap in just one swing move, right, in about 2 weeks. And once it filled that gap, we pull back a little bit, got up here, pull back, got up again, pull back even a little, even lower. And then finally we had that another earnings gap up, and we were able to get out of that. But things got pretty hectic until next earning date, right? So now the difference is, though, this is an earnings gap, so that's a bit of difference. And the gap size is not as huge as some of the ones that we looked at, but it's a pretty sizable gap. So I won't be surprised to see certain kind of freaking ass happening here, just coming down, just making things a little bit hectic, and then possibly getting back up. But I've seen these happening where they can just go straight up, just thrust higher. Obviously, anything is possible in the market, but I would have to see what happens in this vicinity before I can conclude that what potentially be an outcome after hitting this level, and what kind of candle we clean, what kind of sentiment, what kind of action we get once we get there. But again, bullish piercing candle, we need to see a follow through to the upside. We need to see another bullish day tomorrow. At least if we have like a like a short day or something like this, kind of like not much a move, we can hang around, but we want to see next few days following up to the upside, and finding supporters to support its cause, which is bullish piercing cause, right? As far as intermediate term price action sentiment is concerned, that is still in vicinity of higher low, right? This low is definitely lower than this low. This low is definitely lower than that low, which means we got low, and higher low. We got high, we got higher high, and higher high. What does that mean? We are in a cultivation of an uptrend intermediate term wise, right? So that's a good level that we saw bounce, but we want to see a follow through. So next few more days, it will be very important. This whole week is probably going to be important. 10 EMA is the next level to watch. It's about 116.59, and then 120.85, 120.45, 125.59, 120.59-ish level, which is a gap fill level. That's a level, is an important level, because if we're going to get up here, are we going to pull back and make things hectic again, or are we going to go straight, are we going to thrust higher, right? Nobody really knows how it's going to play out until we get there, and then see how it's going to play out when it gets there, right? You guys have a great night, and we'll talk to you guys later.